Indian government bonds are a hit with foreign investors. Investments by foreign portfolio investors has crossed the $1 billion mark in just 19 days after government securities were included in the JPMorgan Global Bond Index on June 28. This information was as per the data from the Clearing Corporation of India and as per a report by the Economic Times. With the softening bias in bond yield, experts expect inflows to increase at an accelerated pace in the coming months. Bond yields have marginally moderated over the past couple of months due to increased inflows. In the run-up to bond inclusion, foreign investors invested more than $11 billion into index-eligible bonds since the related announcement was made in September last year. Total FPI inflows in the previous month, excluding June 28, stood at $1.8 billion. Analysts say, as the weight of Indian securities gradually rises in the index, the domestic bond market is likely to attract nearly $30 billion inflows over the next 10 months. Bond is a sort of a certificate issued by the party which takes loans or debts. The government bonds, or gsecs as they are called, are a debt investment on the sovereign government of a country. The government bond market is a sign of belief in the Indian government's ability to repay its debts, including interests. More the belief in government bonds, more is on the corporate bonds of that particular country. India's debt or bond market is still in its developing stage and far behind the equity markets. This is the developing story, and we at Mint shall keep you posted as more investors deal with the Indian bonds.